Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on natural gas, starting with the hourly time frame. So this oversold bounce is still holding up. We do still have higher lows and higher highs. Once we got this big confirming move by the bulls with all that volume, we have been in a slow but steady higher low, higher high pattern. Recently, we're seeing some upper wicks of profit taking from the 283, 284 range, so we do need to be watching these resistances as we can see these upper wicks up here. But we do have a nice little uptrend line that we can draw on the hourly. Hitting these higher lows, making sure no candlestick closes below this line. I'm going to be watching this as we head into next week. And in terms of resistance, we are looking at, let's see, we've got a lot of upper wicks here, and I would put a line right about there as we can see all these rejections. And I'm putting it here because we're topping out with the most upper wicks rejecting from this level without the ability to close above it. So I'm looking at 2827, could round that up to 283. Let's put it there and see what that looks like. So pretty much 283 is resistance, the hourly chart. The bulls need to close above that level for continuation. And if we do get that close, we will be looking up at this next little previous price history resistance point. We'd look at previous support, now resistance of 286, and then we'd be looking up at 289. So a different perspective on things, looking on the 4-hour time frame. We can see we have a bullish MACD cross, and we've had some nice follow through. RSI is hovering right around 60, so there's still upside potential. And the daily time frame, we have our higher low and our higher high. We have the 10-day moving average as support. We'll look at the back test and hold of that level on Friday. So a nice job by the bulls getting over it, back testing and holding it, and we can count back. This is 5 days, 6, 7, 8, 9, 10. So I know that in 2 more days, once these days are no longer being factored in to the moving average, and really just one more day, once this day is no longer being factored in, this moving average is going to level out, and then it's going to begin ascending. So we'll see if the bulls will be able to hold that level and keep riding it to the upside. And here on the daily time frame, resistance after 284 is 2913. So there is still some upside potential for the bulls. The weekly time frame, we have a bullish reversal candlestick. We need to confirm it this next week. It's also an inside candlestick. So the volume is certainly there for the bulls this week, and we need another green week. We have not seen 2 green weeks in a row in natural gas since in 2017. So this would be the first time in 2017 if we could see another green week this week, and obviously that's the ideal scenario for the bulls. So UNG on the daily time frame, we can see this oversold bounce playing out a little bit more now. Bullish MACD cross, a little higher low and a higher high. We're over exponential daily resistance, and the bulls want to see the 4-period exponential cross the 8-period to the upside for a bullish TCG cross. And the next resistance level, we have this gap to fill up to 714, but this middle Bollinger Band is going to be down below that level to start this next week. It's going to be right around the $7 range on Monday and Tuesday, so we have to keep an eye on this daily middle Bollinger Band. That's the resistance for UNG to get above. Bullish reversal Dragonfly Doji last week. We had a rough start this week, but the bulls bought that dip. That's a green Marubozu candlestick showing the bulls were in control all week, and we are looking up at that gap of 714. Nice momentum for the bulls heading into this coming week. We just need to keep in mind that we are fighting the trend on the daily time frame. That daily time frame definitely does have a downtrend over the past pretty much all 2017. So almost 2 months, 2+ months with a downtrend. We are seeing an oversold bounce play out, but we can anticipate a lower high to be set and then the bears to be fairly tough after that lower high is set, after the bulls tire themselves to the upside. So keeping an eye out for signals of topping out action as well. And once we do get those signals, the bulls will then, it'll be up to them to form a higher low and higher high and see continuation. So keeping a close eye on volume. We know the bears are just patiently waiting for their time to strike again, as they have been all over it this year. But as of right now, the momentum on the weekly time frame does favor the bulls. Keep an eye on this 10-day moving average. Close below that is certainly a red flag on the daily time frame for the bulls. Thanks for tuning in. I hope you have a great weekend, and we will see you on Monday.